Hello folks, I'm here today with my good friend Philip, and Philip is a mortgage advisor. Now, as you know, I do lots of videos about car finance and different ways of buying cars, and one of the things that I always say is don't ever use a mortgage to buy a car. Basically, don't get a top up to your mortgage to use as car finance, because it's a terrible idea. And sometimes that gets shot down a little bit in the comments. So I thought I'd actually bring along someone that's qualified to talk about this kind of stuff, and you can hear it from him.
100%. Right, so using a mortgage to buy a car, to start with, I bet a lot of people don't say when they're borrowing more money what they're actually going to do with it. Because if you told a lender that you're borrowing more money to buy a car, they're like, no thanks, not that. So I imagine a lot of people, that's starting off on mortgage fraud to start with, so that's not on. But taking out a loan on your house to buy a car is mad, because you're probably borrowing that money over, let's say, average 20 to 30 years. And so your interest is worked out for that long. Madness. You might be able to go and buy a car for cash, great, but that, I'm sure you don't get a good deal on that. You'll know more about that, whether, you know, dealerships want to give you the finance or whatever. But will you ever pay that car off?
Yeah, and how much have you paid for it at the end of it?
Exactly.
Say you pay for it for 25 years.
Well, if you do it over and over again, say, towards the end of your mortgage, you could be paying for 4 or 5 cars.
Yeah.
And, you know, what have you got to show for it?
Yeah.
Apart from a load of money on your mortgage, a load of interest you're having to pay on that mortgage. And especially now, you know, when rates have gone up to where they are, about, you know, a 5-year fix is about 4.5%.
Yeah.
You know, if you can get a deal from the dealer on the car finance, it's cheaper. You're not lumbered with it for 30 years.
Yeah.
So you got to think, you're buying a car with your mortgage. Technically, you're buying it for 30 years.
Yeah.
If you look at it in the whole big scheme of things. And it's just wrong on so many levels.
And then if we flip that on its head and say you take car finance, or you lease a car, or you get a personal loan to get a car, or anything like that, how does that affect your ability to get a mortgage?
Okay, so any outgoings you have will affect your affordability.
Yeah.
So I did a video on my Facebook page about...
Which is?
𝘾𝙃𝘼𝙉𝙉𝙉𝙍 Mortgage Services. Very, very useful. There's lots of insightful stuff on
Link
there.
in the description for all PKs. Ooh. We're in a Genesis G360 at the moment, and it's making noises.
It's just found my channel and thinks,
I think that's
awesome.
it. Yeah. So I'll put all the links to Philip's various accounts and contacts in the video description, and pinned as a top comment, so you can get in touch with your mortgage needs.
Thank you very much. But yeah, going back to the affordability side of it. So say you pay £250 a month for your car, whether that be PCP, hire purchase, lease, or a loan.
Yeah.
That does come off. It's a monthly outgoing.
Yeah.
So it does come off your affordability side of things. However, say you're coming towards the end of your finance agreement. You say you were in the last 6 months. We don't really have to declare it on because it's ending.
Yeah.
It's not going to be an ongoing expense.
Yeah.
So if you're clever and you work out the timing to do with a remortgage or a new mortgage, and the ending of your finance, you could effectively work it so it doesn't get taken into account. Therefore, you're able to borrow a bit more, because they think, okay, that's 250 quid that is available. So therefore you can afford that extra payment.
Yeah.
But it certainly does anything. So even if you buy a car on a credit card, the payment on the credit card, the balance, when you speak to your mortgage advisor, doing the initial fact-finding stage, they'll ask you, if you've got a car on finance, what's the monthly payment, how much is outstanding on it, what the original loan amount was for. A lot of detail that has to go into it.
Just going back to that original point, you definitely don't want to have your shiny car on your mortgage. You want your house on your mortgage, and maybe you want an extension on your mortgage, or improvements to your home on your mortgage. You do not want a car on there. Your house is hopefully an appreciating asset. Your car is a depreciating asset, unless you've got Steve McQueen's Ferrari or something. You know, that's the way it is, folks. So please, when it comes to car finance, look for car finance products or personal loans or cash, or however what you want to do it. Don't consider a mortgage, because it doesn't make sense.
Not at all.
Thanks for watching, folks. Do go and check out this man's various social medias and do give him a call if you need any mortgage advice. I'll put the details on the screen and in the video description, as I said. And I'll see you on the next one.
Bye.